selling price of goods returned to the head office is a 504, or you can do it like 1 over, you can do it like this. You have 336, you can do it like this, and or you can do it like 1 over 3 times 506. You have the profit, then you subtract the profit from the selling price. You still have the same 336, but this is a fast. You can use this fast method so that you will be able to finish up in time. So you can use 2 over 3. Even also this, you can also use 2 over 3. 2 over 3 times 30870. You see that at the end of the day you have a 20580. So that is that. So you can use 2, because since profit is 1 over 3, that means cost will be what? 2 over 3. So that is how since it has been done here, we convert our margin, our cost to margin. So we can do it like this. So now let's go to the third one, opening stock. Two over 3 times, we have 1125. Don't forget in the question, opening stock is opening stock at start. It said at invoice price amounted to 11925. So we want to convert it to cost price. So that is 7950. Then we also have closing stock. All the stocks, anything that has to do with stock, it is we are given in the as invoice price, which is selling price. So you need to convert every stock to the cost price. So the same thing, 2 over 3. Now another information is that don't forget the question we are told here. There is something that I want you to be very careful here. There we have what we call good in transit. There are some good here. They said good involved on December what? There are some good. You can see here, just look at the good involved to the branch at 462 on 26 November was not received by the branch until January 15, 2000. Now, and they had not been included in the figure. This is how you go about this. This is how you go about it. You know it is on when you say good is on transit. That means the goods has not reached. The good is sent by the head office, but the goods have not reached the branch until when the branch closed their account as the 31st December 1999, and they said the goods now reached the branch on January 5th, 2000. So what do we class this? We treat it as what we call return, because the branch received the goods the following year. They did not receive it that year that the goods is being sent. So that is how you prepare goods in transit. You classify it as goods in transit that has not reached you as at when the branch prepare their financial statement at the end of their branch account as at 31st December. So that is that. Now, having done that, so you prepare this as return to head office, because it has not reached the head office as at when they prepare the account. So you classify it as a return. You treat it as a return to the head office. Now, so let's start the workings. Having done with this, looking at the format, the first accounting treatment the first accounting period, which is the ledger we first do, is the branch cost stock account. And don't forget that is a cost price. We have a debit side and credit side here. Now, why are we preparing branch stock account? We are preparing branch stock account in order to get the gross profit of the branch. And another thing we use branch stock is that we used to monitor the movement of stock, the moving in and moving out, to control the movement of stock from the branch, from the headquarters for the head office to the branch. That is why we are preparing the stock account, and also to ascertain the gross profit of that stock, mainly for stock at the end of the day. So now we have a balance here, which is the opening stocks, and that is 7,950. We have opening stock. Don't forget that it is in the question, it is given as invoice price. It has been converted to the cost price, which is 7,950. Then we have a goods sent to branch. This side will be, it is the head office that is preparing it on behalf of the branch. So the goods sent to branch has to be debited, while the return goods in transit, cash sales, has to be on the credit side. So now, this is the opening stock of the goods that the branch has, which form the opening stocks. Then goods sent to them during that year is 20,580, which is the cost price of which it has been done here, which is 20,580. Then we now put our cash sales. That means sales that is made from those stocks, which is from that opening stock and goods sent to customer. So sales that they made there is 13,002. You can see that this is a reducing part of the stocks to know the balance of the stocks they have at the end of the day. Then they also made credit sales from this goods sent to branch. They made credit sales of 12,126. Then don't forget, they also have return. Good return to head office. That means return, they call that one return outward. That means out of when the return occur when those goods are not good, when they are bad. So they transfer it to the head office. So you can see that it is reducing those goods that are sent to the branch. Then we have good on transit, which I told you the other time. It does not reach the branch on time. So they treat it as a good, you can treat it as return. It's also another return. So 308. You can treat it as return. So it's good on transit. So at the end of the day, don't forget we are giving the question that the balance stocks, closing stocks of the branch is we are given in the question. Most of the time it will be given and most of the time it will not be given. But here you are given as a cost price, as selling price, which we change to the cost price, which is 10,720. Now, having done this, we add it together. We add this and we add this. We know whether we have profit. When goods is being sent, you sell it on cash, and most of the times on credit sales, most of the return you return it, and goods on transit. And at the end of the day, if you are given balance, you want to find the gross profit you have at the end of the day. So that's why we are preparing branch stocks, to know the gross profit you realize from the stock. That means the profit that the branch realize from the stocks at the end of the day. So we have 36, 5, 10. So you see that this credit side is greater than this. So, and if it's greater than this, we have what we call gross profit. But if this side is greater than, that means we have what we call deficiency. That means maybe cash has been stolen or good has been stolen. And that's why you can see that the advantage is to detect error or to detect any fraud. So from when having prepared this, when there is deficiency, you will definitely know from the account. So we have a 7,980 at the end of the day. So let's balance it. So this is the profit they realize from the stocks at the end of the day, which is the gross profit. We definitely have the net profit after you have relieved the net expenses from the gross profit. We have the net profit at the end of the day. Now the next one we'll prepare is the goods sent to branch account. Now, why we send goods sent to branch account is that it helps the head office to know the amount of the goods that is sent to branch during the year. So you represent it with a branch stock account. So branch stock, this is talking about goods that was sent to branch, which is don't forget on cost price. Then out of this, don't forget that out of this goods sent to branch, the return to head office. And which is this? Don't forget, we return out of this that was sent, the return 33. And there is no other returns again. The reason why this is not here is that it is strictly goods in transit. So it will not appear here. Now, what we now do here is that you get the real goods, because when the good is sent to the branch and they return this to the head office back, then you know the real goods sent to the branch at the end of the day. So find the difference. You see that you get 20244. So that is you transfer this. You can call it a purchases or transfer to trading account, or you can call it purchases. So this is the real goods that was sent. The good that was sent is 20,244 at the end of the day. So let's balance it. That is that. Then the next thing we'll prepare is the branch debtors account to adjust. You know, the reason why we have to adjust for our